GameStop's surge is making it one of the most traded stocks in history. What's behind that, and is it manipulation? This is the IG Trading Talk. I'm Manuel Koch. And joining me now are Salah Eddine Bouhmidi, he's the head of markets at IG, and the legendary Einstein of Wall Street, Peter Tuchman, over 35 years on the floor of the New York Stock Exchange. So good to see you guys.
Great to see you from the floor of the Stock Exchange.
Yes, and we see you, Peter. You're on the floor of the New York Stock Exchange, and there's a lot going on. I bet GameStop is a big topic also for you, right?
You know what, it is in many, many different ways. Look, I'm not I don't own and buy and sell stocks for myself personally. I do for the customers of my company, but I'm more of somebody, as Salah is trying to track this historically as a phenomenon. What's going on? Why is it happening? What does it mean? What is the implications in the integrity of the marketplace, right? Stocks can trade on two different things. They can trade on fundamentals, earnings, guidance, right? And things like that. They can trade on technical analysis, charting, moving averages, relative strength index. And then the new phenomenon, which is what's happening here, is a social media gangster chat room phenomenon. That's all it is. It's a new story. It's an ever evolving story. For me, it's important for me to identify the motivation behind it and then try and understand it. But anything like this, where you have stocks go from 20 to 500, back to 300, up to 400, down to 60, where you've got the contagion of it spreading to other companies that have short interest. Who are the bad actors in the game? Who are the winners? Who are the losers? Who's being disadvantaged? Who's making money, losing money, and what's going on? I'm a firm believer in integrity of markets. I'm a firm believer in protecting the investor, whether he's a big guy or a small guy, not getting hurt. And this seems like a situation that is a little bit out of control.
Yeah, Peter, this is a lesson actually in these days for traders, for especially people who are starting to trade, because you need to know what is behind short selling, what is happening with a short squeeze, what is a gamma squeeze, which is happening on the option market. So let us please give a message to the people who are the audience of us, not to be greedy and knowing about what they are doing.
So look, I'm a firm believer to stay away from the Reddit herd chat rooms, okay? You can do it if you want, and I hope everybody makes money. My fear is, though, as you and I, and we've mentioned before, are big fans of technical analysis. Technical analysis is a reading of charts. Tell you, look, buying and selling stocks is not a game. It's not a game. Stop. Right? It is, you're at risk. Money is at risk. And it's something you don't just get. You want to become a pilot. You don't read a book about flying. You rent a plane, get in a cockpit and fly across the ocean. You're going to run into turbulence. There are small intricacies and big intricacies that affect markets, especially in this new world, no rules 2021, with the social media involvement here. What we're seeing is, look, I'll give you a quick rundown. There are short sellers are a big part of the market. It's been that way for many, many years. People buy stocks on fundamentals because they feel it's a good company, they're going to have good earnings, and it's a good company. Short sellers are people who have made a bet that the company is overvalued. They're able to sell stock short, hoping it goes down. These are the two parts of the market: buyers, sellers, and short sellers. Historically, we've always seen it. Back in the day, you used to have these big corporate raiders or big short seller arguments between a Carl Icahn and a Bill Ackerman. Let's say Herbalife, for instance. Bill Ackerman bet that it was a pyramid scam. Carl Icahn thought it was a good buy. I'm not sure which guy was on which side, but it was one-on-one, big titans of Wall Street fighting against each other. What you're seeing here is, I believe, is a young bunch of gangsters who have found a niche in a way to use social media to pump up stocks. It's really no different than the Wolf of Wall Street in so many ways. Okay? So what you're seeing is they're identifying companies where there's a big short interest. They have a following of 4 million people who they start chatting up saying, let's get the big guy, or let's just make some money. So a short person who's short at $20, for instance, the stock's trading at $4, right? He's making money. He thinks the stock goes lower. If you get 4 million people, and as we know that there's 40 million new traders, retail in the market since the pandemic, gorillas in pajamas hitting buttons. That's how I describe it. They have no background, no education. They don't know how to trade. You know, they look like a rock star since March, because if you hit any buy button and you bought stock, you look great. However, if you rally 4 million people and you say these guys are short, well, let's buy the stock up, and you get it above where they're short, well, now they're losing money. If you get it $20 above where they're short, they're losing a lot of money. At some point, they're going to have to buy their stock back, which is pouring gasoline on a fire. And that's how you see GameStop, that had a 48% short interest, I think that's the number, get above where they were short, get way above where they were short, with 4 million people just buying 1,000-share lots or 10 or whatever. And it gets above that, you pour gasoline on the fire, and then you see what's called the short squeeze. Everybody who's short's got to buy their stock back. And you see a stock go from 20 to 500. And that's the problem.
Short is the word. And going back to classical markets, actually, right now, it's the first day of the new month, February. Seasonally seen, volatility is the second highest month for volatility in February. NASDAQ is, in post-election years, Peter, it's an loss month for the NASDAQ 100. Average loss is 3.3%. So for those guys who are now thinking, yeah, let's go, skywalking everything, be aware that we have seasonal patterns, that we have technical analysis, which shows us maybe that February could be a correction.
You know what? Look, I think everybody gets very sort of hyper-focused on what's the flavor of the moment. For this past week, last week, it was the GameStops. It was those stocks that they picked up, the KOSS, the Nokia and whatnot, and that's where everybody's attention is. Let us not get diverted from the fact that we're in the middle of a global pandemic, that markets are still volatile and crazy, that the virus is still on fire, that it's super necessary, whether you're an investor or a trader, to stop listening to this chatter. We have no edge on that chatter. It's a dangerous space to be in, and all I can do is tell people, go back to technical analysis, be careful here. You may go to the well once, twice, and 3 times and make money on these things. Eventually, you're going to give it all back. It's way too risky in my world, I think, for anybody. As an educator, as all three of us are, as a disseminator of responsible information, I beg people to step away from that. Let's look back at the fundamentals of the market. February, historically, yes, is a month where we often give back some of the profits of the Santa Claus rally and the positive surge of January, right? We saw that we're still in volatility market. A couple of days last week, market did sell off 600 points. We did see the market rally back a number of points too. There seems to be an undying thirst in the investment community and the trading community to buy stocks like crazy. We have so many new people involved in the markets, right? 40 million plus. And the more attention markets get, and the more eyes are on all these people slinging money around and claiming that they made millions, the more people are going to go into it. It's just like following the herd. And I fear when I see the herd being followed, because people are not buying stocks for the right reasons. They are at risk if they don't have an edge. This is not a get-rich-quick scheme. This is real money, real people, real business, and real life. So I think I agree with you. We should get back to looking at historic data, keep our eyes on what February has to bring. We still have obstacles in reopening, right? There are stocks, the airlines are still getting hit on the reopening story. We still have a pandemic where their vaccines are really at a minimum distribution level. The logistics are in question. We do have a new president here who's making every effort to be transparent, to try and get things going on. There's so many moving parts. I don't know whether we need to step aside from historic data going forward. We need to keep an eye on it in the rearview mirror and look forward a day at a time to see how this story will unfold. One of the risks is that this story, the short selling story, could overflow into other stocks, right? It may not be just the stocks where there's a big short interest. They may start, these Reddit gangsters may start just talking about any stock and talking it up. As we see it happens on the press every day, right? People talk up stocks. It's seen it happen. It's the nature of the business. Is there any integrity behind it? Not often. Do we know what people's motives are? Not really. So, I'm on broken glass here. I'm treading water here in the fact that I'm keeping my eye on it as this story evolves.
Peter, talking about NASDAQ, we saw a lot of earnings last week. Facebook, Apple, Tesla, many big names. Do you think there is something like a bubble in this tech sector, or is it still a healthy trend upwards?
You know what? I mean, people always ask about bubbles. I'm not a proponent of bubbles. Yes, they've happened. And, bubbles are more this situation with happening with the short thing, where there's no fundamentals behind it, is more of a potential bubble than the NASDAQ marketplace. NASDAQ earnings that came out last week were extraordinary in so many ways. David Green always talks about be careful with trading earnings, because there's a lot of buy the rumor, sell the news. The price action of the stock is more significant to me if you're a trader than the earnings per se. But if you look at the numbers, what did we see happen last Wednesday and Thursday when Facebook and Apple came out with earnings and Tesla? Is that the earnings were good on all counts. They beat on all fronts, yet the stocks did trade off quite radically initially, right? And then they bounced back. So the numbers were real. The sales of Tesla were up. Apple had a record high engagement. Also Facebook. So these guys are hitting on all pistons. Those numbers are real. Whether is it going to drop off radically? I don't think so. You don't lose customers. It takes a lot when you're at the level where these guys are in valuation and in engagement, it's hard to grow at the level they're growing, yet they keep growing. So that's my 2 cents.
One parallel that we can draw, Peter, is you can see Bitcoin was searching, and now we can see a small correction in the market. Could be healthy. So this is also a parallel, educational parallel for traders or beginners. You see, don't be greedy. Wait for corrections. Use technical analysis. Maybe Elliott wave, maybe moving average. There's a lot of ways how not to copy and paste your trade, rather than making your own style.
I love that you say that. It brings back us to everything. Follow the Bumidi bands, ladies and gentlemen. They are incredibly significant. Follow technical analysis. It will always protect you in markets of volatility. The bottom line is that things that are overbought need to be sold. Things that are oversold need to be bought. We need multiple criteria to get involved in a stock. Just because a stock went from 20 to 500 and back to 300 doesn't mean it's time to buy it. We will find, if you use the charts that we've taught, Salah has taught, David Green has taught, moving averages, relative strength index, pivot points, it will tell you in a very patient and consistent way where you have a probability of buying a stock and making money on it. Everybody thinks, Zoom went from here to from 40 to 400 and back to 280. It's got to be a buy here. It wasn't a buy until 220, right? Because that's what the graphs told us, right? So we need to go back to the education, the technical analysis, and the fundamentals of that in order to get people to protect themselves, because people are being tossed around like a seagull in a hurricane. And I don't want people to get blown up. I don't want the small investor or any investor to get blown up. And the bottom line is what we're seeing this phenomenon happen is a perfect example of why, if you go back to technical analysis, you will rarely get hurt. You will lock in your loss if it goes against you, and you will make money more times than you will lose. What money you make, you'll keep more of.
Exactly. I mean, FOMO, a lot of people have fear of missing out, but why are they not fear of missing out learning educationally trading? When it's by stocks, they are really fast, but start your education, use it really. This is the best thing for your performance.
Wall Street Global Trading Academy, David Green, Peter Tuchman, and Salah.
Exactly.
And the IG
Thanks.
Trading Talk, of course, right?
Exactly.
Absolutely. Manuel Koch.
So guys, thank you so much. Peter Tuchman, the Einstein of Wall Street, live from the floor of the New York Stock Exchange, and Salah-Eddine Bouhmidi, the head of markets at IG. Guys, thank you so much. Appreciate your time.
Same. Thank you, guys.
And thank you for watching. This was the IG Trading Talk for this week. More information on IG.com. Thank you very much and have a good time.